Welcome back. Now, last night's January fuel adjustment came as a relief for South Africans. This follows the Department of Mineral Resources and Energy's announcement to drop the fuel price, with the price of petrol decreasing between 62 cents per litre and 76 cents per litre, depending on the grade. Diesel prices have dropped substantially by between R1.18 and R1.26, depending on the grade. Wholesale illuminating paraffin prices fell by 93 cents a litre. The department attributed the fuel price adjustments to the Rand-US dollar exchange rate and the decrease in crude oil prices. To help us unpack what the fuel adjustments mean for South Africans and the economy at large, we're joined on virtually by Ndumiso Kubheka, who's Chief Economist at KH Research Equity Partners. Ndumiso, a very good morning to you. A warm welcome to Morning Live. Speak to us about the role of the global geopolitics, especially the shipping routes around the Red Sea and the Rand-US dollar exchange rate on the impact of oil prices.
Good morning, a very good morning to you, Lebo, and a good morning to your viewers. The geopolitical developments play a significant role in terms of ultimately the price of fuel that you and I pay for at the pump. And this is primarily because of a phenomenon that we would then define as cost push inflation that can be associated with either the decline or the general rise of prices when it comes to fuel. This is because a lot of the inputs, such as the agricultural sector, for example, or even transport and logistics, are heavily reliant on the use of fuel to be able to move goods, primarily whether it be goods that you and I consume on a day-to-day basis, or even durable goods such as fridges and other hard equipments that are used on a day-to-day basis. And then therefore businesses and companies ultimately factor in that cost to be able to then service their own operational expenditure and also add some level of margin to that. And that's why we then define it as a cost push inflation factor when it comes to the goods and services that you and I consume. And so whatever happens from a geopolitical level is ultimately going to affect the price of Brent crude oil in the main, which we've seen quite recently really trading below the $80 mark. Would remember that during the peak of COVID, the price of Brent crude oil was ranging at around $60 per barrel, which was almost unheard of in recent times. And so we've seen, and also post-COVID, we also saw the price of Brent crude oil as well trading around $100 per barrel. So we've seen quite significant variances happening at that level, which has also had the impact when it comes to the inflation discourse that we've seen over the past 3 to 4 years.
Mm-hmm. Now, the decrease in fuel prices will bring, relief to many struggling consumers and businesses. Is it too early, though, to predict if this will also determine how the oil price will fluctuate in the next couple of months?
Well, I think there are quite a number of determinants that would inform whether or not it's too early or whether or not this will be the outlook when it comes to 2024. The first is, what are the drivers that affect the price of Brent crude oil that ultimately affect the price of fuel that you and I pay for at the pump? The first is the question of supply, whether OPEC, which is the Organization for Petroleum Exporting Countries, really whether they increase supply into the market or they do not. That ultimately has an impact in terms of what then the average price of Brent crude oil in the marketplace becomes. Secondly, what other oil producing countries that do not form part of OPEC also do when it comes to supply. That also has an effect in terms of what the ultimate price of fuel then becomes. Then the second aspect becomes the rand to dollar exchange. This is because as South Africans, when we purchase oil, Brent crude oil in this instance, we purchase it in dollars. And so depending on the strength of the rand at any particular point in time, that would also inform the price point at which we would then be able to purchase fuel at the pump and whether or not it will lead to an increase or a decrease. And so I think as consumers, it then becomes quite important to really pay attention to those developments as to what OPEC and OPEC related countries are doing and the geopolitical developments in that area. And of course, the strength and the performance of the rand provide in that given point in time. That will then give us, whether it be on a monthly or a quarterly basis, some kind of outlook to estimate what we're likely to pay for in terms of fuel at the pump.
And we also expect the Reserve Bank governor as well to speak on interest rates. I think it is later this month, around late January. How much of that will impact how the kind of year that South Africans are going to have?
So when it comes to 2024 and what we've seen in terms of the inflation developments in 2023, we have seen some level of stickiness when it comes to inflation. And stickiness here, we refer to not a consistent decline that is sufficient enough to really confirm that we're seeing a rapid decline in terms of inflation. But in 2024, we do then anticipate that inflation will indeed fall comfortably within the 3 to 6 inflation target by the South African Reserve Bank. And as a consequence of that, in the second half of 2024, there is indeed an expectation that we will start to see a decline in terms of interest rates from the South African Reserve Bank. This, of course, we also factor it in with what is we then refer to as ceteris paribus, which is in essence refers to all things remaining constant when it comes to the geopolitical developments, when it comes to the average price of Brent crude oil, and of course when it comes to the performance of the South African rand, all of those, and of course the inflation outlook, all of those impact in terms of what the South African Reserve Bank will then do when it comes to interest rates. However, in terms of a general outlook for 2024, we do then start to anticipate the first set of interest rates being cut in this fiscal year.
And speaking of 2024, I suppose we can't have this conversation without even touching on food prices. I mean, we saw the food prices in 2023 go really high up, grocery baskets going smaller and smaller with the amount of money you have. What does the economy in terms of food prices look like for 2024?
The question you're asking, Lobi, is so important because even the conversation that we're having now plays an important part in terms of what farmers and the agricultural sector have as an outlook when it comes to food prices, because it feeds into the idea of what we call inflation expectations. So the conversation that you and I are having now, for example, feeds into inflation expectations for entrepreneurs and, of course, inflation expectations for farmers. Why this is important, Lebo, is because when there is an anticipated expectation that inflation will decline, what it therefore means for farmers is that they would not price in greater increases in terms of their costs to be able to produce whatever crops that they're actually producing in their farms. This has a positive effect for consumers because the increase that would have been anticipated or expected is not as significant as what may have been as what we've seen in the year of 2023. And so given this latest development around the inflation increasingly being more within control, and of course, the first set of interest rate cuts that we do anticipate for 2024, that would then have a positive effect in terms of what the general increase in prices of food might look like, which we would then anticipate it would be slightly lower than what we recorded and experienced in 2023, which I think will augur well for the consumer. I think even from the rains that we've been receiving, and of course the plantations that farmers had actually undertaken over the last while, we do anticipate that a good harvest will then also feed positively in terms of the price of food and inflation expectations in that regard for 2024.
But some analysts are also saying, let's not celebrate, it's a bit too early. What are your thoughts on that?
Of course, I think there's always room to be able to be moderate in terms of some of these expectations, particularly because of some what we refer to then as exogenous factors. These are some of the factors that are not within our domestic control as a country. We've seen in the past, because of significant increases in fuel prices, especially in the post-COVID-19 era, where a national treasury has come in to really manage some of the administrative taxes that are associated with fuel prices, just to relieve consumers for a period of time. But of course, this is compounded by what other developments might be happening at a geopolitical level. And of course, these are some of the factors that are not within our domestic control. And so because of those reasons, it is important to be moderate in terms of this outlook, although positive, but I think it's also quite important to have that kind of moderate outlook when it comes to some of the numbers that we are also seeing. And so for a consumer, I think it also means that when it comes to budgeting and when it comes to forecasting expenditure and all other important items, it's important to have that frame of mind when looking at some of these data points.
And generally, personally for you, the economic outlook for 2024, what does it look like?
So the South African economy, we personally don't see it recording over 2%. The GDP growth is going to remain comfortably below 2%, which continues to reflect some of the constraints that are associated with the economy. And ultimately, some of those constraints one of the biggest constraints are associated with the network industries in terms of what we're seeing in terms of the availability and the quality of energy supply when it comes to transport and logistics, from what we're seeing at the level of Transnet, especially when it comes to some of the key commodities that we're exporting into the international market. And of course, the general performance of industries such as manufacturing, which is heavily affected by, of course, energy availability, and transport and logistics, which is also an important employer in the South African economy. We've also seen the increased contribution of business, finance, and trade services as an important contributor in terms of nominal GDP to the South African economy, and that we see that trend continuing to be the case. However, if some of these structural elements that are associated with network industries are unlocked, our outlook for 2024 will certainly be uplifted. But as things stand, we still see a comfortable below 1.5% GDP growth for 2024 in this instance.
All right, Ndumiso Kubheka, thank you so much for speaking to us. He's a chief economist at KH Research Equity Partners, talking to us about the fuel price adjustments and what it means for South Africa's economic outlook.